Accounting for depreciation. Let's assume that a business bought a machine for $120,000 and also assume that depreciation is $40,000 each year. When the business bought the machine, the following entry is recorded. Debit machine and credit cash for $120,000. If we prepare the statement of financial position on that date, the machine's value is $120,000. What happened after 1 year of using the machine? If we are calculating depreciation expenses by debiting the depreciation expense and crediting the machine itself, at the end of the first year, the machine's value on the statement of financial position is $80,000. Readers of the statement of financial position will get the impression that the business bought the machine for only $80,000. In the second year, a similar journal entry is recorded for depreciation expense. After posting it, the machine's balance is $40,000. Hence, the balance of the machine on the statement of financial position is only $40,000. This would now give the readers the impression that business bought the machine for only $40,000. In the third year, with a similar entry, the balance of the machine is now equal to 0. Is there a way to reduce the asset by the amount of depreciation and at the same time show the original cost of the asset? Yes, there is. If we use a contra asset account. A contra asset account is the opposite of an asset. That is, it has a credit balance as against a normal debit balance of an asset account, but displayed on the asset side in the statement of financial position. This contra asset account is associated with the asset account, and as it increases, the value of the asset decreases. Imagine a shadow on a wall. As time passes, the shadow becomes bigger and the light on the wall decreases, but the wall is still there. Now let's think of the machine as the wall, and the shadow as the accumulated depreciation account, which is a contra asset account. After 1 year, the accumulated depreciation increases to $40,000. The part of the wall exposed to the light decreases to $80,000, which we can call as the net book value. After the second year, the shadow, which is the accumulated depreciation, increases to $80,000, and the exposed part is $40,000. But notice that the whole wall, which is the machine, is still there in the statement of financial position. Let's see how this is shown on the accounts and the statement of financial position. When the machine is bought, its balance will appear as $120,000. After 1 year, depreciation expense is recorded by debiting its account and crediting the accumulated depreciation. The accumulated depreciation will decrease the net book value to be $80,000. After the second year, depreciation expense is recorded by debiting its account and crediting the accumulated depreciation. This increases it to $80,000. Hence, the net book value will decrease to $40,000. This continues until the assets balance reaches 0, where it is regarded as fully depreciated and we stop recording depreciation thereafter. However, the asset could still be productive though. It is worth mentioning that in real life, usually accountants will keep a balance of $1 as a net book value for the asset to have the asset on record, even if it is only a nominal value.